Trade bills is yet another financial instrument. Well, trade bills is also known as bills of exchange, is drawn on and accepted by the trader, that is trade acceptance, in payment of the goods. I'll explain this in a greater detail. See, many times what happens, there are two entities. One is a supplier, another is a buyer, trader, or a customer. So, supplier of goods and services want to supply its goods and services, but many times the buyer or a trader or a customer doesn't have sufficient money to keep the stock of its goods and services supplied. So, against the stock of goods or commodities, the buyer, trader, or I would say customer requests seller or producer to create a bill. So, this is a bill for goods which are purchased on credit. So what happens, seller or producer makes this bill or bills of exchange in the form of credit bill against the name of trader or customer, so that in near future on the specified date, trader or customer will repay the specified amount in the bill to the seller or producer. In bills of exchange, the seller or producer makes the bill or draws the bill, and the trader or a customer has to accept the bill. Then only it is considered as a valid exchange of goods. So in simple terms, the bill for buyer is called as bills payable, and bill for the supplier or producer is called as bills receivable. I'll explain this bills of exchange concept in simple terms. See, a producer or a supplier puts the goods or sells the good to the customer or a trader under credit. But against that credit, he draws a bill, a post-dated instrument which guarantees that at the specified date, the buyer or a trader will repay the amount. So the seller or producer draws the bill or makes the bill, and the trader accepts the bill. Then only it is considered as a valid instrument. So trader accepts this bill in the assurance that in near future on the specified date he'll repay the amount for the goods he has purchased today. This bill for a buyer or a trader is called as bills payable because he has to pay the money back to the producer. And for producer, this bill is basically called as bills receivable because he is in near future gonna receive money against the bill raised. So in nutshell summary, trade bills or bills of exchange are basically the bills drawn and accepted by trader against the payment of goods. The bill for a buyer is known as bills payable because he's gonna pay that amount in near future, and for producer or seller, the bill is also known as bills receivable because this amount he's gonna receive from buyer in near future. So in bills of exchange, the seller or producer draws the bills against the buyer or on behalf of buyer, and buyer accepts it against repayment of the goods he has purchased from the producer.